Welcome everyone. Thanks to those who've joined. We'll do a slow intro because I know plenty of people are still coming online. We've got a fantastic webinar ahead, which is obviously titled Boosting Cash Flow Before End of Financial Year. But we will of course touch on a couple of those tools and tips to help you get that cash in. We know it's always a mad rush coming to the end of the financial year, but in particular, it's pretty tough out there at the moment. We've got at least one poll that'll give us a sense of how people and companies are feeling right now from a collection perspective. My name's Patrick Coughlin. I'm the CEO at Creditor Watch. I've got Matt McFedries with me as well. Matt was the founder of a company called Debtor Daddy that Creditor Watch acquired a few years ago. It's now called Creditor Watch Collect. Matt, great to have you along. Thanks for joining. I think it's been a while since we've done a webinar together. How are you feeling?
Yeah, good. No, always excited to talk about cash flow. Top of mind.
Yeah, excellent. You're the expert in it. So let's get started, shall we? So Creditor Watch, for those that may be new to our webinars or our company, either as a customer or just interested in what we do. We are a commercial credit reporting bureau. We've been around for 15 years. We've got over 250 staff. We really focus on, sort of three main areas. One, helping you onboard your customers, ensuring that you are checking them, doing your due diligence on them, and then managing them after that onboarding process. And the final one, which is very relevant today, which is collections. How can we help you automate your collection? So we're not a debt collector. We give you the tools that some of the leading and largest companies in the world take advantage of. We make it easy for small, medium, and large businesses. Doesn't matter how big you are, to be able to utilize similar tools that those bigger, more sophisticated companies take advantage of and have taken advantage of for years and years. Our sole purpose is empowering Australian businesses to trade confidently with their customers. So as you can appreciate that obviously spans the entire customer life cycle that you go through with your customer. From a data perspective, we're collecting data from what we call common and unique data sources. So on the right-hand side there, the common data sources, collecting data from the likes of ASIC, the ATO, Australian courts, etc. And then on the left-hand side, our data is ultimately what sets us apart. We're able to provide a credit report on any Australian business or company, including public companies, proprietary limited, and even sole traders, trusts, and partnerships. And that unique data comes in the form of payment defaults, mercantile inquiries, which is debt collection actions, credit inquiries, and then really, really valuable is that transactional software data or accounts receivable data. That gives us the ability to tell you which of your customers are paying, fast, slow in the market, gives you an understanding of the risk that might pose to you, or if you're onboarding a new customer, are they a slow payer? Is that what you want? Is that really what you want to take on, a slow paying customer? All of that information obviously helps you better understand the credit risk that exists upfront, but then also ongoing in your portfolio. A couple of stats to warm us up. What are we seeing out there in the market at the moment? B2B trade payment defaults are at an all-time high. We obviously seasonally adjust this. We put it into an index type of graph, as you can see there, but yeah, well above where we have been historically. It has had obviously a little bit of a dip over the December-Jan period, and this is till the end of March. So our April results will be coming out in the next couple of weeks as well. We release our business risk index every month to give you a really good understanding of what is happening out there. From an ATO tax defaults or business debt disclosure, that continues to increase. It's not at a fast rate. The darker grey that you see there are tax defaults that actually get removed. So when a company has a tax default lodged against it, they can have it removed when they engage with the ATO, enter a payment plan, or have it paid off. But we are seeing a reduction in those ones that are actually being removed from credit files. This is a really powerful indicator. So if you see one of these on a credit report, or you're monitoring your customers and a customer has an ATO tax default lodged against it and you receive an email notification, take note of that. It is really, really critical. It is, you know, we're seeing sort of 30–40% chance of a company going into administration with sort of 6 to 12 months after a tax default is lodged. So very important that you're taking note of those and taking advantage. And then of course, insolvencies remain really elevated. All-time high from a number of insolvencies. Another way to measure it, of course, is insolvencies as a share of registered companies, and that's the blue line. That's, while not at an all-time high, it's certainly at a high over the last, you know, sort of 10 years or so. It will be interesting to see what the next couple of months looks like. Our data that's in our reports, in our alerts, is showing that, you know, that there's probably a continued increase, or at least at this level through to the end of the financial year. Now that we have the election out of the way, and hopefully we'll see another rate cut in May, that will really dictate probably where we see the peak, and hopefully a return to more normal numbers. Our data is certainly showing that the second half of the year will be easier than the first half, which has been tough for everyone, but it will take probably 12 months to get back to a really more comfortable and certain outlook from a credit risk perspective. The last one here, I think it's the last one, I'll eat my words if it's not, is just payment arrears. So this is looking at you know, how many, the percentage of businesses that are paying 60 days or overdue. You've seen a big spike over the last sort of 12 months or so. That continues to go upwards. It is getting tighter out there. It's getting tougher, particularly for small businesses. They are being squeezed at both the revenue and the costs side of things. So they're really struggling at the moment. And of course, that is leading to that increase in insolvencies and payment defaults that we've just had a look at. All right. What I wanted to do is talk with Matt about Creditor Watch Collect, or Debtor Daddy's origin story. So Matt, always great to have you on board. Tell me, you know, when did you launch, and why did you launch Debtor Daddy back in the day?
Yeah, that's going back a little way now. I think the spark for the idea was actually a conversation with my accountant, who should have been in theory teaching me how to get paid quicker, but he was looking at his debtor days as they do. And, you know, I think he was being paid in 47 days instead of 30-day terms. And I don't know why that little problem got stuck in my head, but I thought, well, surely we can automate that. And that's in the early days of cloud. And, you know, we built an app and started to grow pretty quickly, you know, selling it to the Xero customer base. And yeah, I think what was cool is that we just kept on hearing from customers that they just appreciated what, you know, the automation and the cash just turning up on the bank, you know, like they were getting paid quicker. So it was some pretty quick wins. It's good.
And it's fairly simple, right? Creditor Watch had a similar sort of origin story in that that the founder was struggling to get paid, but rather than creating an automated collection, you know, tool, they created a you know, what is now called a credit reporting agency. You know, we want to know which are the bad debtors out there, which are the bad payers. So it's always interesting when a simple but common problem, you know, finally someone stands up and solves it. And tell me, you know, are there any stories from customers that really stand out to you that you can remember from over the years?
I think one of our long-time customers, they're in the lead generation space, and they're growing really quickly, which has an impact on cash. You know, they're trying to hire people, and they're walking that tightrope. But we kind of stayed with them throughout their journey, and their debtor days actually decreased by 50%, I think. So, you know, for them, I mean, they weren't a huge turnover business, but I think it freed up around the 200K of cash back into the business that they weren't having to then, you know, fund their debtor book. And so, I mean, that customer is still with us. You know, that's probably maybe our longest customer. They just see the benefit of having collections tool and system in place, it means it's always on, and it just keeps them in that optimal position as it relates to cash flow. So, I still like talking to that customer. It's cool when you can talk to the customers that you've helped be part of their growth journey. So it's pretty rewarding in that sense.
Yeah, it certainly is. It's nice to have those long-term customers, but also in general, just to hear that the product, the business that you've created for a certain reason is actually solving that problem for companies out there, which is really good. And we've got a couple of sort of case studies or testimonials towards the end of this as well from larger, well-known companies. But I think it's important. You started this for small businesses, but it's obviously scaled tremendously over time, that businesses of most sizes can take advantage of it.
Yeah, I think a recent one for us is we're looking at larger customers. One of them comes to mind in the hospitality space, and it's a scale challenge for them, and that was just getting across their 1,500, 2,000 customers every month. And so, they've been able to reduce their overdues. It was by about 30% in that first couple of months of using the platform. So it's been quite cool to see go from the small business to the larger, credit management teams, and helping with that scalability challenge that you see in the larger businesses.
Yeah, and look, I can say the Creditor Watch uses it, right? We use it for our own collections. We've got thousands of customers paying, a few $100s or less than $1,000 a month on invoice that we're chasing, and there's only so much time you can spend in human hours trying to collect those smaller long tail customers. So obviously one of the first things we did after acquiring your business is actually roll it out internally. So I can say that we are using it internally, and it works. And a lot of the product innovation comes from our own finance team, which is always good to see and hear. One last question, and then of course you'll get involved in the discussion in the following slides. But is it easy to get up and running? I think this is a common thing, or a common misconception maybe, is this feels like a process change. It feels like it will be difficult. Talk us through what that setup and onboarding phase is like.
Yeah, the team have actually put quite a lot of work into this in recent times. I mean, the first piece is the data, and it's plug and play with the leading accounting systems, ERPs, NetSuite, MyOb, and a lot of those common platforms. It's plug and play, so your data's connected. We know what's overdue. That's the key to the automation. But then it's also just having the best practice templates in there. So we've talked to hundreds and thousands of customers really over this time, and we've seen what works in terms of what the outreach methods are. So we've had customers live, same day or next day. It's possible if you just want to get started with the platform. So it is a bit of a change in your process, but it really is quite straightforward. The app shows you what it's going to be doing, and you're ultimately in control in terms of when things go out, and got good visibility over what's happening.
And the ROI is quite easy and quick to calculate. You start to see, that's one of the things that I've heard from customers, is they start to see the benefit of it, within a couple of days, within a couple of weeks. Yeah.
I think when you think about maybe for the people watching today, like if you think about your current collections process, if it's manual, if it's slightly inconsistent, if it's not a well-structured escalation process, then these are the little gaps and holes that ultimately cash leaks out of, because the reminder's not going out, or the call's not being done when it should, according to your business process. So once those things are in place, then that's really what changes the game, and you do see the cash coming quicker because the process is just like clockwork. And then with the Credit Watch letters and brand throughout those, they actually stand out in the market as well. So it's not it's not just a consistency, it's the fact that it's a Creditor Watch empowered product. Got the brand leveraged at each step in the workflow. So it's a lot of things that it does right that helps move the dial.
Yeah, and look, everyone, every business is thinking about or is already moving towards as much automation as possible. I think for me, what I'm excited about is I see Creditor Watch Collect being, a huge part of Creditor Watch's future. We've obviously got our sort of core, reporting and monitoring solution that was the original module, if you will. We've got an onboarding solution, but I actually think Collect will be our biggest opportunity to not only help customers, but selfishly to grow Creditor Watch and the business. It'd be very hard to find a company or a person out there that if you ask them the question, would you like to get paid faster with less effort? I think overwhelmingly the answer is going to be yes. You'd struggle to find someone who says no. So that automation leap and efficiency gain that you have within the business is really valuable. And I think what we'll also start to see is the introduction of AI, potentially AI agents as well, as we start to map out the future of Creditor Watch. How can we further automate? How can we get better insights into the hands of the users so they're making faster, better decisions around who to collect from at what stage, and how that really impacts the cash flowing into the bank account, which is ultimately what it's designed to do. So I think that gives you hopefully a bit of understanding of the importance, the investment that's going into Collect, for those listening in, for those either using it or thinking about using it. It really is probably one of the biggest investments we're making at Creditor Watch at the moment, even though we see all of our products as growth products and the ability to roll them out further across the market. Collect is probably the number one on my list anyway. All right, let's keep moving forward. So a couple of stats that I'm going to throw out here, obviously SMEs in particular, but we're starting to see that move into the mid-market, corporate, even in the larger organizations. But the stat that we've pulled here, really vulnerable to cash flow problems arising from late payment. Late payment rates for small businesses are 3 times greater than for large businesses on average. So we've always spoken about this for a very long time at Creditor Watch. If you're a larger organization, you're more likely a critical supplier, you're more likely to get paid up until your debtor falls over because they run out of cash. Whereas if you're a smaller business, you're less likely to be a critical supplier and therefore more likely to get paid slower or not get paid at all. So obviously, you need to be planning around this, and importantly, we're capturing all of that data to be able to share through the credit reports and the monitoring and alerts as well. So it's a really, really efficient flywheel. So I just want to run a poll here, something that I've been speaking to a lot of businesses about whenever I meet them, whether they're big, small, or in between. Doesn't really matter what industry. Most organizations are saying that if they're not seeing a worsening in their DSO or their ability to collect overdue debts and collect invoices, they're certainly working far harder than they were 12 months ago. And that the same can be said on the sales side of things. I ask, how are you doing? How are you going to target? Even if they're on target or a few percentage points off, it comes down to the effort that's going into actually winning those deals. And that for me is a really good indicator of an economy that's under pressure, businesses under pressure to hit their numbers, to ensure they're profitable. So I think it's always good to get an understanding of how people are feeling out there, how businesses are feeling out there. So thank you to those who did run that poll there. I'll keep working through and we can share some stats later on. All right, why you should try to maximize cash before end of financial year. At the end of the day, you should be trying to maximize cash at all points through the year, not just end of financial year. But as we come into it, there's some obvious ones. You want to boost the cash flow for tax time. There's generally additional payments that are required around this period. You have the ability to reduce bad debt write-offs. that are obviously going to hurt profitability, particularly for those larger organizations that are either reporting publicly or have statutory reports that they're getting audited. Minimize or take advantage of tax deductions depending on the type of write-off that you have. If there's genuine attempts to recover it before June, quite often it can be written off as a tax deduction. Planning ahead for me is the biggest one. Thinking about that for Creditor Watch, we want to know where we're going to land at the end of the financial year. We really want to be able to, have a budget that's created, signed off by our board, that's as accurate as possible. It allows us to forecast better. It allows us to plan better. Just allows us to start off the year really clean, understanding exactly where we are, rather than having to make adjustments to the budget, in July or August, or even seeing ourselves fall behind because we were waiting for something to come in that ultimately didn't come in when we expected it. So really, I talk about having a clear working space, a clear mind, in order to be as effective and successful as possible. Your ledger is a really, really, really important one to do, of course. So plenty of notes plenty of reasons to be pushing really hard to maximize that cash before the end of financial year. Matt, as I go through these, please feel free to jump in and interrupt at any stage, of course. Getting paid on time, a couple of things to take us through here. Regardless of the size of your organization, there are some real basics that you should be doing, and there's some really large organizations out there that also aren't doing this, and that's the reason, one of the reasons Creditor Watch has continued to grow and be successful, not just in the small business space, but all the way up to some of the biggest organizations in Australia. Onboarding customers and capturing all the relevant information upfront is so important, not only from a cleanliness perspective, so you can communicate to the customer the right way. It's a good customer experience for them to get on board. It's the first time they're seeing and interacting with you. You really have to get that right. But then the data capture is incredibly important. Allows you to continue to market to them. It ensures that you can communicate with them the right way. And then, also while we're here, ensure that you're collecting from them the right way. There's nothing worse than having to chase a customer for an overdue debt, finding out that the address, contact details, etc. you have are incorrect, or worse, from a contractual perspective, if you were to pass it on to a debt collector or go to court, all of a sudden, or an administrator is appointed, all of a sudden, you've got the incorrect information, and therefore, it makes it much more difficult or even impossible to actually put in a claim or collect that information, collect that at all.
We see that when you're first going into business with someone, then it's the good time to get their contact details. Trying to get their mobile number when you're chasing them for money is really hard. So, we have a team that's on the phones actually that does calls for some of our customers, and the number of times we don't even have the phone number on record, or you're trying to verify who you're actually chasing money from. So it's like one of those small things that just builds your defenses. If you've got good data down the track, you've obviously got the risk data coming through, but you're also well armed in terms of who you're going to contact, when it comes to actually chasing the debt.
Yeah, spot on. And that leads nicely to the next one. It allows you to actually perform correct due diligence, run the credit report on the right entity, set up monitoring and alerts on the right entity, so you're being kept up to date with the credit risk that client represents to you. If you get that first step wrong, a big chunk of the rest of the steps are likely to be less effective. Reduce exposure when risks obviously arise. So if you've started trading with someone, it's all positive, you've captured all the right information, done your due diligence, great, we're tracking along nicely. What happens next month or next year or multiple years down the track when that risk profile changes? You want to be able to, one, find out about that, hopefully through monitoring and alerts, and then reduce your own exposure. And then the last one, of course, all-encompassing, leverage technology and tools to improve that efficiency. There's only so much you can do. There's only so much you should be doing. If you can have technology in place that is working, 24/7 in a sort of set and forget manner, and is doing that for you, That allows you to focus on not only the customer, focus on sales, focus on, you might be in the middle of a capital raise. There's always other priorities out there that are going to be far more important than those processes that can be automated through the use of technology. Matt, I might pass to you to chat through this slide here on the overdue collections workflow.
Sure. I think this is just an example of one of our standard workflow templates that we've got set up. So this is what comes out of the box really for most customers. So you can see it's multi-channel. You've got SMS, you've got phone calls, emails, and you've got that escalation that happens over time. You can now send the credit watch letters from Credit to Watch Collect, which is a fairly recent development, but it's adding so much more I guess power or teeth to the collections process. You're actually following best practice as you go and you escalate, and getting your reminders out before other people do is you can get the cash while it's still available, while that business is still operating, and so this is what makes it turnkey, and it's really just leveraging best practices out of the box.
Yeah, nice one. And we help you get set up and going almost immediately. What to do when your customers are starting to pay late. So some more stats that I spoke about. Automate overdue invoices. So 72% of firms that have automated their AR say it has reduced operating costs. 49% have automated their AR report improvements in collections. And then the final one there, 14 days. So Credit Watch Collect customers settle overdue accounts 14 days faster on average. So some really tangible results coming through from customers that are using automation when it comes to collection. You can escalate with formal collection letters. Matt's obviously just spoken about that. Not only is it faster to put all the data into a letter and produce it, it then carries the weight of the Credit Watch logo and brand associated with that. If a debtor doesn't know what Credit Watch is, they see that reminder notice, they see the Credit Watch logo, the first thing that they often do is Google who is Credit Watch if they don't know already, and that obviously creates some urgency to pay that debt faster, because obviously the ramifications of having a default registered against their credit file on Credit Watch will make it virtually impossible for them to actually get credit elsewhere, and therefore far more likely to settle their overdue debts. And the last one there, registered payment defaults, as I've spoken about. So just making it really easy upfront, as Matt spoke about, from an automation perspective, to get those reminders out there. Everything from gentle reminders, payments coming up in a few days or a week, a reminder for your collections team potentially to make a call, an automated SMS, all the way through to when you've got to get a little bit firmer, more formal, and stern with those customers who are obviously not paying their bills. Fortunately, in the world of credit, this is what happens. It's often the cost of doing business, but there are certainly so many tools and options that you can take advantage of to not only get paid faster, but actually to make sure you get paid at all, versus obviously having to write something off from a bad debt perspective. Matt, before I jump ahead to those the case studies that I spoke about, anything additional from you to add here?
No, I think you actually nailed it. I think what I keep saying is that following that structured process, or not enforcing terms. Like, we actually ran a survey at a MYOB conference a few years back, and when we asked accountants in that conference, why people weren't getting paid on time, and they simply said, lack of enforcing terms. And so what this does, it actually helps you to enforce your terms, and it gives you real teeth behind it with the Credit Watch brand. So it's pretty simple. If you're not doing that today, switch it on.
It also trains your customer to pay regularly, right? If they're getting a reminder call or email, at a different time every month, they often will respond to that reaction rather than, hey, I know that I'm going to get this this regular reminder at the same time every time.
Often we see, a big cash bump in the first sort of, week, sometimes first couple of months, but over 2-3 years, over the long term, you just see the lateness. We track how many days late on average customers pay, and that's a graph that consistently goes down. And so, yeah, it's because your new customers, they receive a best practice process from the beginning, but your old customers that got into the habit of paying you late, you're now training them to pay you quicker because you're now enforcing your terms.
Yeah, fantastic. And just a couple of customer outcomes from those using Creditor Watch, various businesses, various sizes. Matt, I know that you've worked with all of these customers yourself, so I'll let you take the glory and talk about the success that was had there.
Sure thing. I love the stories where it's reduced the workload of the team. Whether that's the office administrator, the business owner, or whether it's the credit control team. I meet so many credit controllers. Their days are flat out. Like, you get to work, you've got your list sitting in an Excel spreadsheet. It gets exported every day. Like, even the work hours of exporting that spreadsheet every day. So I think the human impact around reducing staff workload has been great. That's always appreciated in whatever size business. But then ultimately, anybody in that credit controller hot seat loves to move the dial and see those metrics come down. So, seeing a meaningful reduction in debtor days, or the DSO, is always, that's a key measure. So, I think what you're saying here, that's exactly, that's what the software does. That's what its job is.
It's just three of many sort of use cases, business cases, whatever you want to call them, that we've got. So if you're interested in hearing more, or you want us to find one that's more specific to your industry, for example, please don't hesitate to contact us. I'm always conscious of time, so we're gonna wrap up in just a second. Always want to ask, would you like further information on this topic? So don't be shy to let us know. Yes, it could just be we send you a white paper or some information on the product itself. It could be that you want some tips on best practices around collections. So please let us know. It helps us understand who would like to be contacted and who might not be able to want to get contacted. And then we'll go from there. So I'll just jump onto the last one, which is just a finishing slide. For those that are interested in additional information about the business risk index, which was the stats that we release on a monthly basis. It's online on the website. You can go to our blog area. You'll see, or the news hub, you'll see the business risk index. Of course, there's information about our various products, or you can ask for a demo as well. Matt, always great to spend time with you and chat with you. So thank you, and again, well done on creating a fantastic product and a fantastic business, and we obviously look forward to taking it to that next level.
Awesome, thanks, Pat.
All right, thank you everyone. Appreciate